You're watching CNBC TV 18 and this is Reporter's Diary. Straight to all the market actions then that started the week on a bare footing and ended lower for the 7th straight session. The Nifty and the Sensex lost close to 1%, with the Nifty falling below the 10,700 mark and the Sensex falling below 36,000. The picture was no different for the broader markets, with the Nifty Bank taking a hit of close to 1%, with HDFC Bank and ICICI Bank contributing over 65% to this fall. And the mid-caps ended the day 0.5% lower. In stock-specific action then, the Anil Ambani-led Reliance Group company saw a relief rally in today's trade. This after the group reached an in-principle standstill agreement with over 90% of its lenders. Now, the lenders have agreed that they will not sell any of the shares that have been pledged by the promoter companies till the 30th of September, as long as Anil Ambani and his group companies continue to service their debt and interest payments. In fact, this is the second such deal in recent times, following a similar arrangement between the Z promoters and its lenders. However, promoter borrowing from the mutual fund industry has come under public scrutiny, especially in the light of the fall in shares that are often pledged as collateral for such loans. SBI's chairman Rajneesh Kumar has spoken out against the promoters pledging their shares for loans and called it a bad idea, and also that it was not the right business model. Listen in.
I think the promoters pledging their equity, I think that is something which needs to be watched on, and it is not the right business model. Because if you have pledged your equity, it means that your stake in the enterprise must be deducted to that extent. Then your net equity has to be determined. So that is something a debatable issue, but over leveraging your own equity, I don't think it is a very good idea. Any sector, it is not untouchable for the banks, but the quality banks or NBFCs themselves will have to be very mindful of this fact that the quality is not compromised.
Well, it's important to consolidate India's banking sector into fewer mega banks which are strong. That is the word coming in from Finance Minister Arun Jaitley, who during his meeting with the Reserve Bank of India's Central Board made these comments. Now, while the meeting is ongoing, we understand that the central bank may announce an interim dividend as early as today. The RBI governor has said that the board would meet public and private sector bank chiefs on the 21st of February to discuss the transmission of interest rate cuts. Listen in to what they had to say.
Rates is very important, especially after the central bank announces a rate cut. As already stated in our post-MPC press conference, I am having an interaction with the CEOs and MDs of the various banks, both public and private sector banks, and that is now scheduled to be held on the 21st of this month, that is in the latter part of this week. So we will discuss that issue with the banks and see what needs to be done. Once it is decided in the central board, then it will be proper for me to comment. I cannot prejudge and preempt what the board will decide. The committee under Dr. Bimal Jalan is already, they have commenced their deliberations. The meetings of the committee are being held. The MSMEs, as you know, that we have come out, the Reserve Bank of India has on 1st January announced a restructuring package for the MSME units. Now up to 25 crores loan outstanding, all those cases are covered in that restructuring package. So now the ball lies in the court of the banks to implement, to restructure the loans of the eligible MSMEs as per the rules and as per the guidelines given the MSME package.
Well, from the current RBI governor to the former RBI governor, competing for farm loan waivers and farm income support can lead to irreversible fiscal deterioration. That is the word of caution coming in from former RBI Governor Y.V. Reddy, who went on to suggest that setting up a state centre risk fund to address the agricultural distress is the need of the hour. He also said that the 15th Finance Commission must be called upon to address the current issue. Listen in.
There has been a disturbing competition to design schemes which are in the nature of simple transfers to farmers. This is being done by some state governments, by the union government and some major political parties. These schemes and proposals have large expenditures of a recurring nature There are genuine concerns about their potential for irreversible fiscal deterioration and for conflicts between the centre and the states. The 15th Finance Commission has to necessarily make estimates about the committed expenditures of the Union and the states. I hope the Finance Commission will take this issue on board.
Well, here's a CNBC TV 18 exclusive news break then. The government is expected to unveil a fresh round of relief measures for startups on the angel tax front. Timsy Japuria has been tracking the story and joins in with the details. Timsy, what are you picking up? Who are the beneficiaries and how soon should we expect this announcement?
Well, what we understand from sources right now is the fact that startups who have raised investment up to 25 crores are likely to get an exemption from taxation, provided they submit certain documents in a declaration. Now, the list of documents is they need to submit their ITR returns of the past, they need to submit audited financial returns, and a declaration of not investing any money in any areas of black money, or neither accepting any investment which comes from any of the investors who have any exposure towards the basic criteria of black money as per the income tax law. Now, apart from this, let me just spread out what exactly this will mean. An application will be received by DPIIT. They will then send it forward to CBDT, where there is a mini office in CBDT that has been carved out under the chairmanship of Member Information Technology of the Central Board of Direct Taxes, who will then go into the credentials of the startup and then issue an exemption certificate within a specific time frame. So this entire case is now going to give a relief that the startups were seeking for, because in the past case, there was nothing like this, and the exemption was given only to those who had raised investments up to 10 crores, and startups were demanding that this minimum threshold is too less and this should be hiked. So that increase is likely to come in the notification. However, for startups which have raised investments more than 25 crores, the exact position remains same, and government might not even put a clarification on that particular part in the notification, which is expected anytime soon.
All right, so that notification expected anytime soon. Timsy, thank you very much for joining, and we'll have you back as and when that notification is made public. Now, the new developments in the 5,600 crore rupee National Spot Exchange case. CNBC TV 18 has access to a report by the Serious Fraud Investigation Office, or SFIO, that accuses 148 brokers for acting in concert with the now defunct Commodity Spot Exchange. Now, this report has claimed that brokers played an important role in defrauding clients for their own benefit. Yash is here with the latest details on that. Yash, a damning report for the brokers. Can you take us through the details and the response from the brokers that have been accused?
Well, absolutely, Ritu. And to start with, of course, let me make it very clear that at the end of last week, the Serious Fraud Investigation Office, or SFIO, filed a winding up petition against IBMA, which is one of the brokers as far as the NSEL transactions are concerned. Now, as a part of that winding up petition, a small subsection was also given in terms of SFIO talking about its investigation when it comes to other brokers who were involved in the NSEL transactions. To be precise about numbers, SFIO has named about 148 brokers representing 13,000 clients who traded on the National Spot Exchange. Also, these 148 brokers named in the report essentially have an exposure of about 1,600 crore when we talk about the entire NSEL scam which broke out. These names essentially include some of the prominent brokerages in the business, names like Anand Rathi, Geofin, Comtrade, IIFL Commodities, as well as Motilal Oswal, JM Financial, also Philip Commodities. And when we talk about charges, some very serious charges being leveled by SFIO against them. To be precise, SFIO has said that the brokers compromise the position of trust by making false promises when it comes to the clients or the investors. They also said that brokers missold products, promised assured returns, as well as said that there would be absolutely no loss when it comes to the NSEL transactions. Now, to be specific again about the charges, SFIO has said that these clients or the investors were lured with fixed returns. SFIO, in fact, these brokerages knew that there was no physical transfer of commodity. Still, it was overlooked and no action was taken against it. To be specific about one particular charge, SFIO said that the unique client code modification was also done by these brokerages. brokerages. Essentially, every investor has a unique client code. These brokerages took transactions on that client code without the permission of the investor. Then again, those transactions were reversed and re-reversed. So essentially, the investors were not kept in loop when it comes to the risks, the rewards, what is at stake when they invest as far as the exchange is concerned. To sum it up, SFIO has also asked SEBI to look into the matter and essentially pronounce all these 148 brokerages as not fit and proper when it comes out to their operations and carrying out transactions.
Yash, also take us through the specific allegations that have been levelled against individual brokers in this report.
Well, of course, some very specific names being pointed out by SFIO in its report and some very pointed allegations against them. To start with Anand Rathi, of course, they've said that Anand Rathi as a brokerage got indulged in a model which is called the fund-based business, whereas it is not allowed by the regulations. Only what is allowed is a fee-based business, and that was a violation as far as the regulation is concerned. To talk about Geofin Comtrade, they've said that Geojit Credits is an NBFC which is owned by the company, and out of which loans were taken in the name of clients without the knowledge of these clients or investors. These loans which were raised were of course invested back into NSEL just to shore up volumes on the exchange, so on and so forth, and clients had no clue about these happenings. About IIFL Commodities, very specifically, they've said that they appointed DCB Bank as an agent which essentially allured their account holders to get registered with IIFL and then trade on NSEL, which is again a violation of the norms. About Motilal Oswal, very clearly they've said that Motilal Oswal wrote off claims which they were supposed to receive from NSEL. These claims which were wrote off were then adjusted into future profits. Their, of course, profitability got negatively impacted, but on the other hand, also the tax liability also reduced because of these happenings which were done by the brokerages. Now, very clearly, out of all these allegations, SFIO is expected to submit a report within the next 6 months. That would be the final report, and they've importantly asked SEBI to look into the matter and consider calling these 148 brokerages not fit and proper when it comes to the transactions which they're carrying out at their operations.
All right, Yash, thank you very much for joining in. But some breaking news on your screen right now. The Reserve Bank of India has released the interim surplus transfer that it will be making to the government, and that is at 28,000 crore rupees. This is what the board has decided to do. The board has decided to transfer interim surplus of 28,000 crore rupees in their meeting held today. Also, this is, remember, the second successive year for the Reserve Bank of India to transfer an interim surplus to the government. Do remember, it was an important component. RBI was expecting this interim surplus to be declared by the RBI shortly after the budget. Today, the meeting of the Central Board did take place earlier this afternoon, and the board has now agreed to transfer that 28,000 crore rupee of sum to the government. We'll analyze that further for you, but that is a very important news break. We were expecting, it has just come in. I'm trying to just also, read out to you from the RBI notification itself on this transfer that the government, that the RBI has decided to now make. Do remember, this was the first board meeting after the interim union budget was announced earlier in February. Now, the board meeting concluded just a short while back. Do remember, we'll also be joined by Lata Venkatesh to analyze this number and what is the significance of 28,000 crore rupees of surplus and what it means for the fiscal as well for the government. Lata, 28,000 crore rupees along expected lines?
Oh, absolutely. For the longest time, I think for the last 5 years, I can remember the RBI surplus at the end of the year has been between 60 and 65,000 crores. So, I mean, the 3 years of Rajan, the average was about 62 to 65,000 crores. So, the expectation only in the demonetization year, the surplus was lower for two reasons. There was a bit of printing charges. That was not much. It was about 8,000 crores. There was also a large amount of cash with banks. So, they had to do reverse repo and pay 5.75% on it. So, they made less money. And that year, the surplus was 30,000 crores. So, other than that, every year it has been more or less 60,000 crores surplus. So, in that, they've given half. So, I don't see this as a surprise number at all. Now, what does this do to the government? Math is a little difficult to say. I think the government in the previous year had expected about 55,000 crores from the RBI. I'm not very sure. Already 40,000 crores was given as the final dividend last year, I think in June, if I'm not mistaken. And then they've got this another 28,000. So it looks like it's not way above what was estimated. This is not going to solve their problems.
Yeah.
Now, I'll tell you where the problem comes for the debt market. If this 28,000 crore is there in the system, the fear is, will Reserve Bank do OMOs?
Okay.
Because anyway, this cash is going to be spent. So the liquidity in the system, the liquidity shortage in the banking system will be less, because immediately government, as soon as gets the money, it is going to spend it. You know, they're going to transfer those 2,000 crores, 2,000 rupees to every farmer family, or any other expense will be undertaken. And so the banking system will get more cash. From the RBI, it goes to the government, and from government, it gets into the banking system. And therefore, will RBI do one OMO less? You know, on Friday, there were 4 bonds auctioned, 2 of them devolved. One of them devolved by 1,000 crores, another devolved by about 1,500 crores. People are not buying bonds because who knows, will RBI do less OMO in March? And this 28,000 crore, therefore, is actually negative for bond markets.
But even though the Reserve Bank of India had made it very clear, up until March, they'll continue to pump in about 40 to 50,000 crore rupees.
They did not give that number. They said we will...
Similar amount into the market. So the expectation was that at least till March, they'll continue to pump in a similar amount, as was indicated by
a commitment. They said we will look at... the amount was never mentioned. We will ensure that liquidity is kept adequate. You know, that was the promise. So there is this niggling worry that if the RBI has anyway transferred the money and the liquidity in the system therefore is surplus, I mean, people are giving reverse repo money to RBI. That's not the case now. I think the shortage yesterday was 74,000 crore. So, you know, it need not necessarily become surplus, but that is a worry for the bond markets. But let us have it from someone who has been tracking this story minute by minute, second by second. Sapna Das, our policy editor from Delhi, is with us. Sapna, yes, the big number is out?
Yeah, I think more or less on expected lines. The expectation was that somewhere around 25 to 28 odd thousand crores is what may come through the interim surplus. You know, the release is also very clear that in a limited audit review, after that this decision has been taken, and whatever is the extent ECF formula, that's exactly what the release is saying. So I suppose now, you know, you've rightly put out the number. 40 was what they had got so far. And plus, if you add this 28, so it's a good number. 68,000 crores worth of dividend from the Reserve Bank of India is not a bad number to go with. And somewhere on similar lines is what the government has estimated FY20 as well. In fact, when the 40 number had come in, the expectation was that it should be around 45 odd. So I suppose that gap also has been made up by this number. And more or less on expected lines. But the issue here again is also the fact that, you know, once the Jalan committee recommendations come in terms of a new ECF framework, and that will be pretty critical because again, by the time those recommendations come in, it will be close to the calendar closing of Reserve Bank of India. So what kind of a future roadmap comes out, again, that will have to be seen. And another point to be kept in mind is that since it's an interim surplus transfer, this 28 somewhere will also have to get adjusted in the number that will come through sometime in August, or rather June, July, once the accounts of RBI close. So again, as I just said, that the Jalan committee records will be important because then will that system of interim surplus transfers, will it continue next year as well? It depends on what it says.
Okay, well,
but
actually,
as of now, it's a decent number to go with.
No, actually, Reserve Bank in the previous annual report, which, as you said, ends on June 30th, 2018. Theirs is a July to June year. At that time, they had said that their dividend is 50,000 crore. They had paid 10,000 crore in January.
Exactly.
And
from RBI side, it's a 50 number. Absolutely correct.
No. So they, 1 minute, Sapna. They paid, therefore, 40,000 crore into this year's budget. Okay, FY19 budget. And now they are paying a further 28,000. So this year, RBI's contribution to the fisc is 40 plus 28, 68,000 crore. And I just have in front of me the receipts budget. And that estimates that 74,000 crore will come from the dividend of RBI, public sector enterprises, etc. Now, we know that all the nationalized banks don't have much dividend to give. So they have largely to depend on RBI. So RBI has just given what was expected. 74,000 crores was expected in the revised budget. If you calculate 40 plus 28, they've given 68,000 crores.
And another 8,000 crore rupees is what the shortfall is. Perhaps will be met by what the public sector banks have not reported large losses this quarter. So some dividend is expected, maybe not as low as some of the last couple of years. So perhaps that will also be a bit of a relief.
Yeah, but for next year, they have estimated 82,000 and 83,000 crores from RBI and the various nationalized banks. Again, you know, it looks like the heavy lifting will be done by RBI. But that 82,000 can be met if the Reserve Bank's normal dividend is 65. This year, of course, it is 68 if you added last year's final dividend and the current interim dividend. It's 68. It's not an unusually large number. I remember one of the Rajan years was 65,000 crores. So 68, maybe higher than that. It is the highest ever dividend in a single year, but it is not much larger than the 3 Rajan years. I'm not counting the Patel years because they were unusual years. They were demonetization years, so that's not an average. Next year is a large number, 82,000 crores, 83,000 crores actually. So that, I guess, will depend on, you know, the government is probably expecting that the Jalan committee will, you know, take into account some of the capital of the Reserve Bank, the contingency reserves, and pass it on into the P&L. Maybe that's what they're expecting. We have to wait and see. But I think the most interesting reaction should come from the bond markets about whether they therefore fear that there will be any shortfall in terms of the RBI's OMO. Maybe we just want to pull up the bond yield. Okay, bond yield at 7.57. Not bad. Okay, I think we have Anant with us. Anant Narayan, professor at SP Jain Institute of Management and Research. Hi Anant, how do you react to this 28,000 crore?
Well, it was pretty much expected, wasn't it, Lata?
Yes.
On Feb 1st, when we had the budget, the numbers indicated the government was expecting something extra to come in from the RBI. To that extent, while it's supposed to be an independent board decision, I guess this was pretty much a fait accompli, right? And we're just seeing it pass through.
No, but you know, Anand, we were just discussing the math. Last year, the dividend was 50,000 crore, of which 10,000 had been paid in January 2018 as interim dividend. And in June, RBI paid 40,000 crore into the current year. And now it's a further 28. So it's 68,000 crore. The average in the Rajan years was about 65,000 crore. So it's not as if they've paid too much more. It's just 3,000 crore more than that average. It's not too much of an arm twisting, would you say?
No, look, there are 2 elements of arm twisting here. One is the money is not due right now. The money would have been due actually in August when the regular dividend is paid. So both last year as well as this year, effectively there's been an advance paid by the RBI, which is kind of unprecedented and hasn't been seen in the past. Now, 2 is, I think, in the Urjit Patel years, for 2 years in a row, we actually saw the RBI holding back some of their retained earnings and, you know, embellishing their contingency fund, I think by 13,000 and 14,000 crores respectively. In a sense, that money has been taken back. You could argue for that, right? You know, so it's been a correction for that going through.
Okay. Yeah, well, you know, actually, they held back a little more than the extra amounts now. So I would still think that the RBI has not parted with last year's cash or parted with the previous year's dividend just yet. That is sitting as reserves, and probably the government will lay claim to it. For
sure. So they can't do that because that's still awaiting the decision from the committee, right?
No, is it a relief that RBI has not given last year's dividends away? If they did, they would have made a special announcement, wouldn't they?
So, Lata, they can't make that payment because anyway it's being considered by the committee under Dr. Jalan and Dr. Rakesh Mohan, etc., right? So they can't say we are transferring money from capital as yet. But in effect, they've negated that 27,000 crores which has been held in the past. I'm not saying the two are related or directly related, but it's kind of one compensating for the other. So look, as a practice, this is essentially preponing, to use a very Indian word, preponing cash flows which are actually due later, which goes into the overall part of, you know, the fiscal math, which you all questioned, saying the numbers don't make sense.
Okay. No, I would still give the benefit of doubt to the government because in the Rajan years, Rajan did transfer 65,000 crores in 1 year and 62,000 crore in another year or thereabouts. So this year, counting last year's 40,000 and this year's 28,000 interim, To the budget, 68,000 crore has been transferred by RBI, which is not unusually higher than what the Rajan years RBI had done. Anand, please stay on. Yeah, Anand, 1 minute. Let's get someone who has been there, done that. HR Khan, former Deputy Governor, Reserve Bank of India, is with us. Just stay on, Anand, for a minute because I want the bond market's reaction as well. Mr. Khan, this looks like a 28,000 crore dividend in addition to last year's 40,000 crore final dividend. Does it look like too much higher than normal years?
No, I will not. I don't know if it is too much or not too much. It must have been arrived at. What has happened, the practice started last year of giving interim dividend. So I am not sure whether last year the books were thoroughly audited. I believe this year it has been audited and surplus has that, and the auditors have seen the books of accounts. And based of that, if they have arrived at some surplus, and I believe this surplus is coming only from realized accounts, not unrealized reserves. So if they realized profit and they are following the pattern of last year and the paying year, and after the board is satisfied, I think technically it is there is no issue. But the major issue which is we are waiting for Jalan committee report about the formula, the methodology based on which
but Mr. Khan, in the years preceding Urjit Patel, that is FY16, FY15, FY15, 16 and 17, the RBI had transferred 62 to 65,000 crores as surplus every year. This number is not much larger than that.
No, so that is not the case. But when you see RBI's balance sheet, it's not in a commercial organization's balance sheet. You can set a pattern that every year the revenue will grow by 10% or the profit will grow by, surplus will grow by 10%. It doesn't function like a commercial entity. So the surplus of RBI is generated out of its forex operations, which is monetary operations. So they are subject to a lot of variations. So you can't say that there is a pattern like this for every year. It is 60,000 is benchmark. You have add 5 year 10% of that, and that's not the way we should look at our as a surplus from a central bank. Central bank's surplus arrive from the operations which are totally different than any commercial entity or a PSU bank. So that has to be kept in mind. Having said that, this is broadly in line with what has happened, but that should not be sent as a benchmark. I would only add that in case Jalan committee identifies there is some excess which is sitting and it has to be distributed, it has to be kept in a dividend distribution pool, which should be used for smoothing the flow to the government over the years, not in 1 year. That's my sense. Okay, no, that's useful advice. But Mr. Khan, so you agree with Anand that this amounts to a little bit of pressuring of the Reserve Bank and getting out, advance payments before the year is done, and to that extent, it is kind of pushed the Reserve Bank to a corner. I don't think so. Because it is finally it will be adjusted against the final dividend, the annual accounts. Yeah, when it is June end is the annual accounts, and July is the accounts will be ready, and the August board meeting normally the surplus is approved. So this was also done. I think last year they have paid and adjusted against the final payment. So normally they pay by debiting to a suspense sort of an account. And finally, it is adjusted against that. It's another matter. This precedent was set last year. For a long time, there was demand for paying interim dividend, which was not agreed to. But last year onwards, it has been agreed to. So that this is now sort of a precedent. So that in a sense, it smoothens the government's operations also. So government should plan accordingly. Well, Anand, I think the point you raised has been answered by Mr. Khan. If the RBI has paid extra, it will make a smaller final dividend payment. What is your answer to that?
So very quick 2 points, Lata. One is, look, nobody disputes that the money is going to get adjusted in August, right? But the point is, what was due in August has been taken in the previous fiscal year itself, both last year and this year. As Mr. Khan says, in the past, the RBI has resisted any such demands for advance payments from the future. Now that amount from 10,000 has become 28,000 cumulative, right? So that's one point. The second point I'll add to what Mr. Khan said. Look, RBI's revenues are not like a commercial organization's revenues, like he said. Why Dr. Rajan's time the numbers were larger was at that point of time you had the market's short of liquidity, and therefore borrowing from the RBI at the repo rate, right? And the RBI was making the spread from its currency in circulation and from CRR to all the way to lending at repo rate and holding government bonds.
Okay.
Right? When demonetization happened, the currency in circulation came down, and plus RBI had to absorb some of the liquidity in the reverse repo, which actually becomes a cost.
Yes.
So the revenue you're seeing as a reduction over the years is caused by issues completely different from normal commercial organizations.
Sure.
I think what is important is certain amount of money has been preponed, so to speak, and been taken into this year's fiscal rather than taken into next year's fiscal.
Okay, very quickly, if you were a bond dealer today, would you worry that there will be a fewer OMOs because this 28,000 crore is there with the government?
I don't think this announcement will come as a surprise to bond dealers.
Okay.
We always knew that the 28,000 crores will come through. It was there, the budget math, it was there for everybody to see. So this by itself is not going to cause a surprise. But you're absolutely right. Look, the liquidity is going to get tightened as we go along. Currency in circulation is going up as we run into the elections. And there's a big question mark as to whether OMOs will continue into the next fiscal year, which is when the large borrowing program comes in. So that uncertainty will remain. I don't think today's announcement changes things in a big way.
Fair enough. Thank you very much, Mr. Khan and Anant, for joining us with your thoughts. So that's two views, basically advancing of the RBI's dividend. But I mean, I'm not shocked by it because it happened last year also. So now the precedent has been set. So I suspect every year there will be an interim dividend.
All right, and if there is an excess, it can always, reduce the dividend in the upcoming year. But, we're completely timed out on this edition of Reporter's Diary. Thank you very much for watching. But do stay tuned. All the news and updates will come up next. And there's also a special edition of Indianomics. Stay tuned for that one.